Hello everybody, in this video I'm going to be doing a brief stock analysis for Spirit, and just so you know up front, this is not going to be any kind of deep dive into their financials, but more so me just giving my opinion on the company as well as the airline industry. I like to start off by taking a look at the 5-year chart just to get a longer term growth perspective. And historically, this is a very volatile stock. You can see it's up about 16% pre-COVID in the last 5 years. But if you look about 5.5 years ago, it was above $60. So it's actually negative during that time, down about over 20%. But just looking at the 4.5 years or so here, not seeing a lot of growth for this stock, which is not necessarily something you'd like to see as a long-term investor. But you're most likely not looking to hold it for several years. You may be looking to make a little bit of a swing trade on it, whether that's holding onto it for a month or so, or if you're looking to hold onto it until after COVID's over and closer to a year. It was down lowest at around March when the overall market was down to about $7. So if you got in anywhere close to that, kudos to you. You're seeing a really great return. And now the stock is back up above $17. So the question is it a great buy at this price? And I would say maybe. It just kind of depends on how long you're willing to hold it. I originally bought into the Jets ETF, hoping that I could just hold on to it for a couple of months and see a really great return, but I'm still holding those shares, hoping for a better return. So it's really a question of how long you're willing to hold and what kind of return you're looking for. And then there's just a couple of things I wanted to point out here. One is that the market cap for Spirit is only $1.67 billion. Compare that to a lot of $10 and $15 billion airline companies. Spirit's actually really small. And then they have a PE ratio of 102 right now, which is really, really high for the airline industry historically. But I think there's a large expectation among investors that this stock is going to recover eventually. Spirit uses the low-cost provider strategy, which means they're trying to do absolutely anything they can to cut costs and get the lowest price that they can on those airline tickets. And right now, with there being such a low demand for air travel still, all of the different airlines are cutting their ticket prices to record lows, which is really encroaching on Spirit's territory. They just really can't compete with other airlines as they were previously able to. They're not able to sell as many tickets because all of the different airlines are lowering their ticket prices. And I also just wanted to add to that, maybe you're interested in investing in Spirit, but you have never actually flown Spirit. They do have kind of the smallest cabins and smallest seat space for you, and they like to add on fees as well to your ticket. You may be able to get a $100 ticket, probably even lower right now. You could probably get like a $40 or $50 ticket just to fly down the East or West Coast. But then they may add on a $50 fee for your bag, a $30 fee to pick your seats, and so on. So you can end up spending a lot more than just your ticket price and additional fees, which customers don't tend to like. And another important point I wanted to make is that business travel is likely going to be changed for several years to come. You may think that overall demand into the airline stocks is going to come back to normal in 6 months or so once a vaccine gets out and is mass produced. But business travel is going to be changed for several years just because so many more people are working from home that companies didn't even know they could get away with. So it's not going to be at as many conferences and people traveling as ever before. So it's really going to take, 5+ years for business travel to go back to pre-COVID levels. Another important point is that oil prices are still very low, which directly affects jet fuel being their second biggest cost after, getting payroll done. And I would actually say jet fuel is a bigger percentage of costs for Spirit than other airlines, so they're actually benefiting from this more than other airlines. And they also have some debt on their balance sheet, which can be worrying to some investors. But if you're looking for the short term, I really wouldn't worry about it too much. And even if you're looking to invest in Spirit for several years, if you look at a company like American Airlines with tens of billions of dollars of debt, Spirit really is just a drop in the bucket of that. And I don't think it's a huge problem. And they're not going to be facing bankruptcy in the imminent future. And then just one of the last points I wanted to make is that they don't have a monopoly in Central America, but they are really, really huge in Central America, and they're probably the most prevalent airline. And as these countries continue to develop, Spirit is going to be in a really great position to capitalize on that. And then just lastly, here is the airline ETF, Jets. If you're a little bit anxious about investing in Spirit because you think there's a possibility of them going BK, there's always this option of Jets. They're up 37% in the last 6 months, and they'll go up probably another 25 or 30% in the next 6 months as long as a vaccine is close to being mass produced. So that's another option I did want to point out. I make a ton of other brief stock analysis videos on my channel, so be sure to come and check those out if you are interested. Subscribe for more content, and thank you so much for watching to the very end.